Hi everyone, hope you're all doing good. This is Trading Coach, and in today's video we are going to talk about the importance of large shadows and wicks. We will discuss about a simple and high probability trading strategy that is based on wicks. So in case if you're not sure what exactly is a wick, or if you're not sure what exactly is a candlestick, I refer you to brush up some basics on candlesticks. In case if you are new to price action trading, you can check out our basic price action trading course video series. I will leave the link of that free trading course series on the description box below, so make sure to check it out. And in case if you are new to my channel, I recommend you to hit on the subscribe button, tap on the notification icon. So if you'd like to know more about me, more about my trading style and what I do here, check out my website, that is www.tradingcoach.co.in. So in today's focus, we will be looking at large wicks. So large wicks often have strong influence in price action. So if you have noticed the price chart, whenever you see large wicks, right after the large wicks, the market gets very volatile. Prices often lead to sharp and strong movements in the opposite direction, right? So these wicks, these large wicks that you see on the chart, right? They can be a result of trapped uninformed traders. These wicks can be a formation because of trapped traders. And these traps can be created by large institutions and big players when they hunt liquidity in the market. So when we are trading based on these specific wicks, it can be a very high probability trading strategy. So which we will see in a couple of minutes. I will show you exactly on the actual chart. So trading on these wicks can really give us some decent returns on the market in a risk adjusted basis. All right. So in the circle of pro traders, the strategy which we are going to discuss is known as Wick Trap. The best way to use this strategy is to apply it on higher time frame, from 1 hour to 1 week time frame. So the strategy which we are going to discuss, it's actually a strategy for short-term trading, swing trading, and positional trading. So this can be applied to directional trading on any market segment. So if you are trading in something like forex, stocks, crypto, commodities, futures, or options, you can apply this particular trading strategy on all these market segments. All right. So now what we will do is we will look at some examples of Wick Trap trading strategy. We will look at the examples on the price chart. Okay. So you can see the chart over here. I'm looking at the price charts on investing.com. So right now I'm looking at gold petal futures 1 day time frame. So if you look at the chart over here, you can see a nice wick exactly at this particular point, right? So we have a large wick over here, and we also have another large wick right after this. So let me mark it out. So take a look at this particular wick. So if you have seen this specific wick, and if you have sold the gold futures right after this particular wick, you can see that the prices have consistently went down. The prices went down for almost like 1, 2, 3, 4, 5, 6, almost somewhere close to 10 days, right? So consistently the prices have actually fallen down. So if you measure the percentage here, if you have taken a short trade right after this large wick, the market fell drastically up to somewhere around 5%, 5 to 6%, right? So this is what we call as wick trap. This particular strategy that you see here, right, this particular trading setup where you can notice a large wick on the price, this is what we call as a wick trap, and this is a bearish wick trap. So let me write it down on the chart so that you can understand in a much better way. So this is what we call as a wick trap. This particular wick that you see on the chart, right, this is what we call as a bearish wick trap. So this is something that's created by large players and institutions hunting the liquidity on the price. So what's happening here is, first of all, you can see a nice rally over here, right? So we have a series of large bullish candles, and right after this bullish candles we have a strong wick to the upside, but right after touching this particular point, touching this particular price level, we can see a nice rejection on the wick, right? So what's happening here is these large players and institutions, they are actually trying to hunt the liquidity. So all the buyers who have bought from this particular point, all the buyers who have jumped into this particular rally, jumped at the edge of this particular rally, they got trapped on the price. All right, these large players and institutions, they sold it right back to them. So people who have bought gold futures, right, they bought it exactly from these large institutions and big players. Okay, and as you can see, right after this large wick, the prices consistently has fallen down, isn't it? So as I pointed out before, right after this wick there is a nice sell-off, and if you have taken a short trade right after the close of this candle, if you have entered exactly here, it would have given you some nice results. You would have made some decent returns on this particular trade. All right, so just like this, we can also see another wick trap exactly over here. Okay, so let us just take a look at this one. So this is a nice bullish wick trap. Even though we can see a very small wick, the size of the wick is twice the size of the candle, right? If you look at the body of this green candle, the wick is twice the size, and this wick has actually taken place right after a strong sell-off. You can see these bearish candles, right? After the formation of these drastic sell-off, we can see a nice wick which has trapped all the small traders and uninformed traders. Okay, so this particular wick trap we see here, this is actually a bullish wick trap. Again, this is created by large players and institutions trying to hunt the liquidity in the market. So what's happening here is all the sellers who have sold their positions, who have liquidated their future contracts, who have taken short positions, right? So the sellers who have taken short selling positions, they are all trapped in the market. So the big players used this opportunity to buy right into this point. All right, so after a sell-off, we had a nice rejection to the bottom, nice trap on the bottom. All the uninformed traders who sold at this particular point got trapped in the market, and right after this you can see the prices went up consistently for, I guess, 1 2 3 4 5 6, I think somewhere close to 10 candles. We can see a nice shoot up in the gold prices, right? So the prices went up somewhere around I guess somewhere close to 4% rally. Okay, so if you have traded this in futures will give you a leverage in the market, so you might have made somewhere close to 40% returns on this particular trade. Okay, so this is what we call as a wick trap trading setup. And I would like to point out another important thing. This particular wick trap strategy is not foolproof. So if you closely observe the chart, we can also see another wick trap setup just at this particular point, right? You can see a nice large wick over here. The prices rejected from exactly at this point. Looks like someone might have used this to get a short trade. Someone might have used this to take short positions, sell their holdings. But unfortunately, right after this wick trap, the prices went down just for one day. All right, the next candle was bearish, but right after the next candle, you can notice the prices consistently went up, right? The market shot up like anything. So this is a good example of a failed wick trap trading setup. Okay. Since this particular trading setup has resulted in failure, this tells us about one important thing, that is risk management, right? So this failed wick trap trading setup is a good example. You can see that the prices went down just for one day, and right after that the prices shot up. So what you have to do is, whenever you are trading this particular setup, make sure you're trading with proper risk management. All right, cool. So just to understand this setup in a must and in a very better way, what we can do is we can also look at the wick trap trading setup on a stock. All right, so what I'm going to do is I'm going to look at a particular stock which is listed in NSE. So we will try to see how the wick trap trading setup has performed in that particular stock. All right, so let me open up the stock chart over here. All right, so let us take a look at this specific chart over here. So I'm looking at Sun Pharma Industries one day time frame. So if I look at this particular chart, I can see a nice wick trap exactly at this particular point, right? So let me mark this over here. So we can see a nice wick trap, a large wick and a small body, and this is taking place right after a nice rally on the stock prices, right? So let me mark it down so that we can understand and we can see what's happening behind the scenes. So we can see a nice bearish wick trap exactly over here. So right after this bearish wick trap, you can see a series of strong bearish candles, right? The prices fell crazily right after that. So if I measure the sell-off rate, you can see that right after this setup, the market fell somewhere close to, I guess, somewhere around 8.55%. That is somewhere close to 9% drop. All right. So if you have taken a short position with this particular trading setup in the futures or in the options, you might have seen some decent returns on the trade. You might have gained some excellent returns on the market. And what's actually happening here is all the buyers who bought the stock here, right? All the peak buyers, all the uninformed traders, so they are pretty much trapped in the price action. Okay, so when the market went up and people who bought it exactly here and here, they are trapped in the market, and all these institutions and big players, they hunted the liquidity here. They used this opportunity to sell the stock. Okay, so right after that, you can see the prices continuously fell down, right? The market fell crazily after that. So just like this, we can also see another wick trap trading setup exactly over here, and we can also see another one exactly over here. So let us mark it out so that we can study these two setups. So we can see a nice bullish wick trap trading setup just at this particular point. So if you have entered right after this, I guess you would have made some decent returns for the next couple of days. So right after this setup, the prices went up for, I guess, 1, 2, 3, 4, 5, 6 candles back to back, right? So this is nothing but another good example of a liquidity hunt. So all the sellers who have taken short position here, they got hunted. The big players and institutions might have used this liquidity to enter long positions in the market. All right. So we had a nice liquidity hunt and bullish rally followed by that particular liquidity hunt. Just like that, we also have another nice bullish wick trap exactly over here. So again, this one is pretty smaller in size, but even though it's smaller in size, I think it had a nice momentum, right? So this is taking place right after a series of bearish candles, right? So if you have taken a trade right after this particular close, right after the close of this wick over here, you might have seen a nice decent trade to the upside. So again, I think here also we might have seen a nice liquidity hunt. The institutions and some large players might have hunted for liquidity, and as you can see right after this trap, look at the size of these bullish candles, right? So it's a very strong and powerful bullish candles, which indicates some big orders, some big trades are actually taking place in the market. So big order flow is coming into the market. All right, so this is what we call as Wick Trap trading setup. It happens on the upside, it happens on the downside, it happens right after a sharp movement in the market. It traps uninformed traders, small traders, and emotional traders in the market. All right, let us discuss some of the important key points. So as I pointed out, large wicks can have large influence on the price. All right, so these particular wicks, they can trap uninformed traders, and they are often created by liquidity hunting financial institutions and big players. So this strategy, as we have pointed out, can be called as wick trap. It's a high probability technique. So it can be applied on any particular segment for directional trading. Say, for example, if you're trading in stocks, cryptos, currencies, commodities, futures, options, it doesn't matter which instrument you're actually trading, you can apply this particular trading strategy. And here is the most important thing. This is a discretionary trading strategy, all right, which means you cannot backtest this particular strategy, but you can forward test this on a small portfolio or demo account. So before applying it on the live markets, I recommend you to test this particular strategy with a normal virtual demo account. Or if you're also a little conservative, you can try to start a small portfolio with very small capital. Try to take 25 to 50 trades based on this particular strategy, see the performance, and then deploy this on the live market. All right, so this strategy is actually used by some institutions and some portfolio managers and some small scale proprietary desk, and even certain algorithmic traders use this strategy to model their algorithms. Okay, so I hope you learned some valuable lesson in this particular video. If you are if you have any questions or if you have any doubts related to what we have discussed so far, leave your questions and doubts on the comment box below. I will try to go through it and I will try to answer them. If you like this video, please click on the like button, and it will motivate me to create more videos just like these. Last but not least, thanks a lot for watching, and happy trading.